In today's video, we're talking about a very important part of crypto investing, and that is knowing when the right time to sell your crypto assets to maximize your profits. Timing your exit strategy is just as important as knowing when to buy. Now, I've been in crypto since mid-2017, and not having a cash out strategy in previous years has been my biggest crypto mistake to date, possibly my biggest mistake in over 20 years as an investor. By watching this video, you're going to avoid this mistake, and you're going to give your exit strategy the attention it deserves. To kick things off, I'm going to go over some of my biggest crypto mistakes relating to selling crypto, or not selling, should I say. Then we'll look at historical data to see what we can learn from previous cycles. And to finish the video, we'll look at what's coming over the next 12 to 18 months. By the way, nothing in this video should be taken as financial advice. This is just my attempt at helping you with my crypto experience. Please learn from my mistakes, because crypto can be brutal if you don't put the work in. One of the biggest mistakes investors make is letting emotions dictate their selling decisions. I've always been too emotional with money and investing. Since educating myself from 2019 onwards, this was very apparent when I took the time to look back on my relationship with money. The thing is, if you are aware you're too emotional, you can at least try and do something about it. I do things like meditation, exercise, cold therapy, and even books have helped. A big one for me is to look back and think about my mistakes, like when I've been too emotional. So going back to 2017, I got too excited and I was checking on my cryptos too much on CoinMarketCap. I got too emotional and I got greedy. I invested into a few altcoins, and by the start of 2018, I was up by about $30,000. I didn't cash out and it went tits up. This was painful, and I buried my head in the sand until 2020. I refused to even think about crypto because them mistakes were hard to take. I should have taken the time to educate myself, but I can't go back, and I'm not into dwelling on past mistakes. Then I put the work in. I read the books, I listened to the podcasts, etc, etc, and I still messed up. I made £68,000 from 2000 in April 21 from a meme coin with zero utility, and I didn't cash out. The greed got the better of me again. These mistakes were painful and highlights the importance of having a cash out strategy. I did eventually learn from my mistakes, and during 2021 made some good profits, some good returns. What we can learn from previous cycles. Let's look at the price of Bitcoin over the last few years and my crypto journey since 2017. So I got into crypto back in August 17, when the price for one Bitcoin was roughly $4,000. If only I could go back, I'd maybe buy 4 or 5 Bitcoin, but I can't. As investors, you can't regret anything you've done yesterday or a few years ago. It's what you do today and tomorrow that counts. Anyway, I got into crypto with 3 altcoins. I put 2,000 in each, and by the peak of that particular bull market, you're talking December 17 going into January 18, I was at $30,000. Now, I didn't have a clue. I didn't have a cash out strategy, and I watched my $30,000 over the next few months with the price of Bitcoin drop, and it went from $30,000 to about $2,000-3,000, and this killed me psychologically. And what I'd done from 2018 to 2020, I buried my head in the sand. So I didn't get back into crypto until just after COVID had started, around March 2020. Again, Bitcoin was in and around $4,000, just over, but again, I didn't buy any Bitcoin. But what I did do, I started reading up on Bitcoin and crypto to improve my understanding, because deep down, I believed in it. I knew it was the future. I knew it was coming. So 2020, I'm reading all the books, researching, and by January 21, so the price is in around $38,000 for one Bitcoin, I bought 10 altcoins, including Ethereum, because I'd researched them. I understood Bitcoin and cryptos, altcoins, much more. I didn't buy Bitcoin. I was scared of the price, but that's another story. So I bought my altcoins and managed to cash out some of my altcoins along the way, made some good profits, and by the peak of that particular bull cycle, so 69,000 in November 21, my portfolio was at around $120,000. But unfortunately, I didn't have a cash out strategy, or a very good one, and watched my portfolio drop over the next few months by 80 to 90%. But this time, although it was painful, it did hurt, I didn't bury my head in the sand. And all the way through 2022, I read the books. I doubled down on education, which is what you're meant to do as an investor during hard times, during bear markets. And by August 22, I started dollar cost averaging into Bitcoin, Ethereum and Matic. And I've done this all the way through every single month up to 2024, up to now, April 2024. But this time is different. I've read all the books, I've done all the research with my portfolio. I've got some Bitcoin, some Ethereum, some others in my portfolio. I've got a cash out strategy, and I'm also looking at market indicators to help me with that cash out strategy. But more of that later in the video. Going off historical data, the peak of the Bitcoin cycle is normally around 18 months after the halving. Looking at the big picture, this means we've still got plenty of time now to get in, buy some crypto and get out with a well thought out exit strategy. As I've said, I've not had the best cash out strategy in previous crypto cycles, but this time it's different. My cash out strategy, my personal cash out strategy, is aligned with the price of Bitcoin. I'm very confident that the price for one Bitcoin will surpass the last all-time high by some distance during the next bull market, based on my conviction of the technology and the continued adoption of Bitcoin and crypto. I believe the price for one Bitcoin will reach $150,000 over the next few years. I'm going to continue to dollar cost average into crypto during this bull market. And when the price for one Bitcoin gets to $100,000, I'm going to cash out 50% of my portfolio. With profits made from crypto capital gains, I'm going to pay the tax I'm required to pay. Then I'll put the rest into property, and at this stage I'll reassess my options and decide on the next step in terms of cashing out and taking some profits off the table. But is this enough? I made the decision around Feb 2024 that I needed to do more so I don't mess this cycle up. So I've started looking at market indicators. This is so I can focus on what's actually happening day in, day out, week in, week out, instead of just relying on what I think is going to happen based on my convictions. Before we look at the chart, I just want to touch on some of the market indicators you can use. The indicators I've been using are volume, RSI and moving averages. Volume is the number of crypto tokens traded in a given period. Traders and investors use this metric to gauge the interest in the crypto to help them make trading decisions. RSI, or Relative Strength Index, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. A moving average is a technical indicator that investors and traders use to determine the trend direction of cryptos. It's calculated by adding up all the data points during a specific period and dividing the sum by the number of time periods. So we've got various indicators we can use. This is the volume across the bottom. So this red indicates that the bears are winning on this particular day, that there's more selling. And this is indicated with the red candle above. If it's green, the bulls are winning. There's more buying going on. And again, this is indicated with a green candle. You've also got the RSI down here. But for me, the main thing I'm going to be doing in this market cycle is using moving averages. And in particular, my main focus is going to be 200-day SMA, simple moving average, and the 50-day simple moving average. This green line is the 200-day moving average, simple moving average, and this red line is the 50-day SMA. If the price is above the 50-day SMA, this is very bullish. And even if the price drops below this 50-day, we're still bullish. What you want to be looking out for is if this 50-day SMA drops below the 200-day. This is called a death cross, and this is something I'll be looking out for. So if you go back here, the 50-day passes through the 200-day, and this is called a golden cross. So it's a strong indication that we're in an uptrend, it's a bullish indicator. So my main focus is going to be on the 50-day and 200-day SMAs. Among other things, I'm going to be watching what's happening on a daily basis, but this is just part of my cash out strategy to help me with my cash out strategy. Now, if we go back, we can use these indicators to look at what's happened in previous cycles. So if we look at 2021, this is the 50-day SMA, this is the 200-day SMA. The price is above the 50-day, so this is bullish, as I've said. And the peak was 69,000, and it drops below this 50-day SMA at around 58,000. So if you got out at this point, you will have probably made good profits. You might have waited till the death cross when the 50-day crosses up back over, when the 50-day drops below the 200-day, and you would have got out at $48,000. This isn't as good as 59,000, but it's still better than what it dropped down to, which was around 15,000-ish. So moving averages is a good indicator to use. If you'd have used it in the last bull cycle, you'd have been able to get out with good profits. And that's my intention with this bull cycle. I'm going to use it as part of my cash out strategy. When to sell, the main point of this video. First of all, you educate yourself. What you've done by watching this video. Then you decide how much you can invest, how much you can afford. Let's say you put 10,000 in and you go 50% Bitcoin and 1,000 in 5 altcoins. Now you might say, I'm not touching Bitcoin for 10 years because I'm convinced it's a good hedge against inflation. With the other 5 altcoins, you might say, right, I'm cashing 50% out of each when they do a 4x from here. If this plays out, you're getting £2,000 for each altcoin, and that's all of your money back out. So you haven't got any risk in crypto. Plus you still have Bitcoin and some altcoins left over. This isn't an exact science, by the way. Or you might be thinking, right, I'm going to put 20,000 into Bitcoin. If it does a 2x from here, I'll pull 50% out and leave the rest where it is in my cold wallet for the next 10 years. Again, because you're convinced by Bitcoin and the fact it's a hedge against inflation. Whatever you do is going to be closely tied to your financial goals and your risk tolerance. Having a clear exit strategy is crucial for maximizing your returns. Whether you're aiming to secure profits, cut losses, or reallocate funds, make sure you have a plan in place for when the time comes to sell. You might have a £5,000 loan to pay off, for example, and use crypto profits to pay it off. What I want for you is to learn from this video. You might disagree with my cash out strategy being so closely linked to the price of Bitcoin, or the fact that I'm also using moving averages to help me with my cash out strategy, with my plans. The main thing I want you to take away from this video is the importance of education. You can learn from me and others, but we're all different as investors. My strategy might be too high risk for you. It might be too low risk, too conservative, and you might be thinking the price for one Bitcoin gets to $200,000 during this bull cycle. If you learn about Bitcoin and crypto, you invest what you can afford to lose or are happy to lose. You then read up on what to sell and do your best to walk away with decent profits. What's coming next? What can we expect from the volatile world of crypto over the next 12 to 18 months? Well, it's going to be up and down, and it's going to get emotional. My opinion is that we'll see Bitcoin at $100,000 in 2024. That's mainly because of the success of the ETFs, the demand from the big institutions, and I think Bitcoin gets to $150,000 in 2025. When, I'm not sure. I haven't got a crystal ball, unfortunately. If history is anything to go by, the peak of the next bull market will be towards the end of 2025. But whether it plays out, nobody knows. When can you buy back in? Let's just say in an ideal world, you put the work in, you educate yourself, and you end up cashing out with a decent profit, somewhere near the top of this bull cycle. You buy some assets like property and also pay off some of your debts. Happy days. You still have some cash left over and decide to keep it in a cold wallet as USDT, a stable coin pegged to the US dollar, ready and waiting for the next cycle. Imagine the bear market starts at the beginning of 2026. After a few months of waiting patiently, you start to dollar cost average into 5 well-researched cryptos and you believe it. You do this and you continue to learn. This is the best way to buy back in after this cycle, in my opinion. Summary. First of all, I want you to learn from my painful mistakes and understand the importance of a well thought out cash out strategy. Then I want you to put the work in and educate yourself. With some education, you can buy crypto. Then you decide on your own cash out strategy. But what if after all this information, you're still unsure about what cash out strategy you should go with? If you look below in the comments, I've got you covered with a video that gives you 5 examples of a cash out strategy. My hope with this video is that you've got loads of value from it, that it helps you as a crypto investor, and that you cash out over the next 12 to 18 months with some decent profit, some decent returns. With everything I've got, good luck, and thanks for taking the time to watch this video.